Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now the Bitcoin price is still holding above this importance Fibonacci level after we received news from the Federal Reserve, which resulted in a small pullback in the stock market. I'll be talking about all of that and more in this video, and just before we jump into it, you might as well leave a like down below, and if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight into what this video is about. So right here we're on the Bitcoin US dollar chart on the daily time frame, and we have our same Fibonacci levels that we've been looking at here on the channel recently, which is of course on the logarithmic scale, and that puts the 78.6% Fibonacci level at around 35,000, which at the time of recording this video, we have held above that level so far, which is good to see in the shorter term, but keep in mind we haven't necessarily confirmed the bottom, at least just yet, because looking in the Bitcoin daily RSI, we are still trending to the downside, making lower highs and lower lows, as you can see, and we haven't yet confirmed any sort of reversal. So personally, what I'll be looking for is a possible break above this descending line of resistance in the daily RSI, which is right now coming in at around 35, and the daily RSI is currently coming in at around 30, so just about oversold territories. And we also have a similar thing going on the 3-day time frame for Bitcoin. Of course, we are still in this downtrend on the 3-day RSI, and so as I just said, before we can really confirm any sort of recovery back to the upside, we first need to see a trend reversal in the 3-day RSI, because if you're looking at all of these other time periods throughout years worth of Bitcoin price history, usually we see more bullish price action coming into play for Bitcoin after we see a reversal in the Bitcoin RSI on the larger time frames, like the daily time frame and the 3-day chart, for example, which as of right now, at the time of recording this video, we have not seen that just yet. We are technically still below this descending line of resistance, but this is something that I am paying attention to moving forward. And something else that I am paying attention to is the Bitcoin weekly chart, looking at the weekly volume in particular, because usually when we see a significant move to the upside or to the downside, those moves often end in a major spike or surge in the weekly volume for Bitcoin. And if you're looking at what we've seen recently, in fact, over the past few months, we have seen very limited volume in comparison to this previous volume that we've seen over the last few years. Now, it's important to mention that this is not necessarily something that we need to see in order to confirm some more bullish price action, but if we see this major spike or surge in volume, that is just another way to be more confident that we are potentially bottoming out, and as of right now, we have not seen that just yet, once again. And now getting into the news from the Federal Reserve, which by the way, it shouldn't really be news to us because most of the recent announcement was pretty much already expected. If you watched my Bitcoin update video yesterday, in that video, before this news was even released, I let you know that everyone's pretty much expecting the Federal Reserve to end their taper and to begin hiking interest rates as early as March this year. And that is pretty much exactly what they announced. So they're basically following along with the same plan that they announced last month, which is to keep interest rates as they are right now, but in March, they will begin raising interest rates as their plan suggests. And this is due to Jerome Powell finally acknowledging the risk to inflation. And by the way, for anyone that does not know, Jerome Powell is the chair of the Federal Reserve, and he basically said that there's a risk that inflation will not decline back towards its pre-pandemic levels anytime soon, and that the rise in prices could accelerate. So the scenario that he's talking about there is basically hyperinflation, which is not good for the general public. So honestly, it is totally understandable that the Federal Reserve wants to raise interest rates to try and regain control over the rapid inflation happening right now. But in the shorter term, interest rate hikes are technically bearish on the markets, because if interest rates are higher, that basically means that borrowing money is more expensive. So that technically reduces the amount of money that can be borrowed, which pulls a lot of buying pressure, a lot of money out of the markets. And over the long term, that can be seen as a good thing because it means that the economy doesn't need to function on only cheap money. But once again, in the shorter term, while those interest rates are rising, technically that is a bearish thing for the markets. But keep in mind, because this is public information and pretty much every investor already knows this, it's very likely that a lot of this news is now priced into the markets, which means the recent sell-off over the last 1 to 2 months is mostly caused by investors preparing for those interest rate hikes this year, which could be seen as a good thing for prices later in the year when those interest rate hikes are happening, because a lot of the bearish price action that is associated with all of those interest rate hikes is pretty much already playing out right now. And by the way, this chart right here is the S&P 500 index on the 1-hour time frame, and you can see here that we actually saw a small recovery leading up to the Federal Reserve's meeting, but then the moment the Fed news came out, we saw a small pullback in the stock market, just a quick sell-off, but it wasn't really anything massive, at least compared to what we've seen in recent weeks. And speaking about the stock market, this is the Nasdaq 100 index on the 2-day time frame using the Fibonacci candles, and this type of pattern right here is known as a broadening formation formation, as you can see, and this pattern basically means that the market is experiencing heightened disagreement among investors. So basically, when we see a lot of uncertainty in the market, we see these sort of patterns form, and in the stock market, technically they are more bearish than they are bullish. And obviously, the biggest uncertainty recently is around the Federal Reserve and inflation, but obviously this is not the first time we've seen a lot of uncertainty in the market. Going back to the last time we saw a lot of uncertainty was back here, leading into the beginning of 2020. And by the way, this chart right here is the S&P 500 index on the 2-week time frame using the same Fibonacci candlesticks. And instead of the uncertainty around the Federal Reserve and around inflation as what we're seeing right now, back then leading into the beginning of 2020, we had a lot of uncertainty around the pandemic and a lot of uncertainty around the US election and things like that. And as a result of that, we saw this massive broadening formation, but we didn't quite make it down to the bottom support line on this final dump to the downside that we saw in March 2020. Just like how recently in the Nasdaq 100, we have come slightly short of this line of support. So obviously nothing is guaranteed in the markets, but now that we have the Federal Reserve's meeting out of the way, at least some of the uncertainty has been reduced, which could possibly lead into some sort of recovery. Of course, nothing is guaranteed, but I thought this is definitely something to pay attention to because obviously you can see what happened last time and look at what's happening right now. And as always, if you want to get extra updates on the financial markets, make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. If you made it this far in the video, you might as well leave a like down below, and if you're new to the channel, be sure to subscribe with notifications turned on so that you're not missing out on any of these important updates that I post every single day. As always, I appreciate every single one of you here on the channel. I can't thank you enough. And before you click off, you might as well check out one of these uploads if you haven't already, because these videos just here can potentially help you make more money in the crypto market, even if crypto prices are going down. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.